With the U.S. markets now closed for the weekend, Palantir Technologies finished Friday's session on a deeply negative note. As of the closing bell on October 3, 2025, the stock stood at $173.07 per share, a staggering drop of $13.98, which translates to a 7.47% loss in a single day. The trading volume was immense, hitting over 105 million shares, far surpassing its average volume and indicating a day of heavy conviction among sellers. Now, a decline of this magnitude often sends retail investors scrambling, especially those managing their self-investing portfolios through platforms like Robinhood or SoFi, where sentiment can shift in an instant. The immediate assumption, the expectation, is that something is fundamentally broken. But the reality of what drove this sell-off is far more specific and nuanced than just a bad day for tech. It seems the catalyst was a report citing an internal Army memo that flagged potential vulnerabilities in a battlefield communications network Palantir is involved in. And that single piece of news is precisely where the market's long-held narrative about this company both finds its validation and completely misses the bigger picture. The common belief about Palantir is that it is, at its core, a secretive government contractor, an extension of the defense and intelligence apparatus. Its fortunes, in this view, are inextricably linked to geopolitical tensions, government budgets, and its ability to win massive, opaque contracts. When you look at a big red day like this, triggered by a negative report from a government client, it seems to confirm that expectation perfectly. Investors who bought in thinking they were getting a piece of a shadowy, indispensable government partner see their thesis rattled. They compare it to steadier tech giants like Apple stock and wonder if the volatility is worth the price of admission. The narrative is that Palantir's government ties are both its greatest strength and its most significant liability. This is the story that has defined the company since its direct listing and continues to dominate headlines and message boards. It's a simple, compelling story, but it is rapidly becoming an outdated one. The reality is that the future of Palantir and the real tension in its valuation has almost nothing to do with the government anymore. The deeper truth, the one that institutional investors using sophisticated interactive brokers platforms or clients of Fidelity Wealth Management are keenly focused on, is the company's aggressive and incredibly successful pivot into the commercial sector. While the market was reacting to a headline about one government program, the underlying engine of Palantir's growth was firing on all cylinders in the private sector. We saw this in their last earnings report from August, which was a watershed moment. U.S. commercial revenue didn't just grow, it exploded, surging an incredible 93% year over year. The company closed a record-setting amount of total contract value, with a huge portion of that coming from new commercial clients. This isn't just incremental progress, it's a fundamental shift in the company's identity. The driver for this is their Artificial Intelligence Platform, or AIP. It's allowing companies to deploy sophisticated AI solutions at a speed that was previously unimaginable. This is the reality that contradicts the market's expectation. Palantir is no longer just a company that serves generals and spies. It's rapidly becoming the operational backbone for corporations looking to survive and thrive in an AI-driven world. The heavy sell-off on Friday, based on a government-centric headline, presents a stark disconnect. It shows the market is still pricing the stock based on its old story, not the new one that is unfolding in its financial statements. That being said, a serious analysis can't ignore the pressures. The sheer volume on Friday's drop indicates this wasn't just retail panic. Institutional players were also trimming or outright selling positions. Why? The valuation is without a doubt stretched. Even after the drop, Palantir trades at a very high multiple compared to other software companies. There is ongoing debate among serious analysts about whether even meteoric commercial growth can justify this premium. Another persistent issue is stock-based compensation. The company pays its talent handsomely in stock, which leads to shareholder dilution. This is a constant drag on earnings per share and a valid concern for anyone building a long-term position, whether in a personal individual brokerage account or through Fidelity IRAs. Furthermore, broader macro factors are at play. While the tech sector has shown resilience, persistent inflation or shifts in interest rate policy could put pressure on high-growth, high-valuation stocks across the board, from Tesla stock to Nvidia stock. A company like Palantir is not immune to these sector-wide rotations. Investors today are looking for investment help and trying to decide whether to weather this storm or seek safer harbors. The heavy selling suggests that for many, the risk calculus shifted on Friday. For those who are newer to the name, let's briefly clarify what Palantir actually does. The company was founded with a focus on serving the U.S. government and its allies, offering a platform called Gotham. Think of Gotham as a central nervous system for data. It allows an organization like the military or an intelligence agency to pull in vast, disparate data sets and fuse them into a single, coherent operational picture. It's designed to find the connections and patterns that humans might miss. On the commercial side, they have Foundry, which applies the same principles to the corporate world. It helps a manufacturing company optimize its supply chain or a pharmaceutical firm accelerate drug discovery by integrating all their internal data. The newest and most significant product is the Artificial Intelligence Platform, or AIP. AIP acts as a layer on top of these existing platforms, allowing customers to build and deploy their own AI-powered applications and agents securely within their own network using their own private data. This is what has ignited the explosive growth in the commercial sector and changed the entire conversation about the company's future. The shift from a service-intensive model to a more scalable software platform is key to its long-term prospects. Looking ahead, the tension between the old government narrative and the new commercial reality will define this stock. The bullish scenario is that the commercial growth not only continues but accelerates. If U.S. commercial revenue continues to grow at or near triple-digit rates, it will eventually eclipse the government business in size. At that point, the market will be forced to reevaluate the company not as a defense contractor, but as a premier enterprise AI software company. Consistent GAAP profitability, which the company has now achieved for several consecutive quarters, could also lead to its inclusion in more major indexes, forcing index funds and Fidelity ETFs to buy the stock, providing a steady stream of demand. Platforms that offer Schwab Intelligent portfolios might start allocating to it as a core AI holding. The bear case, however, hinges on the risks we've discussed. If that commercial growth slows, if competitors begin to offer similar capabilities at a lower price point, or if the high valuation finally succumbs to a market correction, the downside could be substantial. The recent sell-off shows how sensitive the stock is to any hint of bad news, and the valuation leaves very little room for error. Comment below if you believe Palantir's commercial revenue will officially surpass its government revenue by the end of 2026. This is a critical question for anyone performing online investing and analyzing this name. Many are using investing sites to try and model this exact outcome. In conclusion, Friday's steep 7.47% drop in Palantir stock is a perfect illustration of the conflict at the heart of this company. The expectation, triggered by a negative military-related report, is that this is a volatile government stock subject to the whims of Washington. The reality, buried in the quarterly reports and growth metrics, is that of a commercial AI powerhouse in the making. The market reacted to the headline, but the long-term story is being written by the adoption of its AIP platform in the corporate world. The sell-off highlights the very real risks of a sky-high valuation and the market's lingering perception of the company. Understanding that the market is still grappling with Palantir's old identity is the crucial insight for anyone trying to make an informed investment decision here. The disconnect between the legacy perception and the emerging reality is where the greatest risk and potential opportunity lies. Don't forget to subscribe to US Stocka for more in-depth market insights, stock updates, and analysis on the companies shaping tomorrow's markets. Stay ahead, stay informed.